Good afternoon, good afternoon, my friends. We're gonna be going over the the Webull earnings. The call will start in about 20 minutes, 23 minutes here. If I'm looking at it right, it's 4:37. So in a couple minutes we'll have the call. I'm gonna go over my thoughts. I'm gonna go over ASTS as well, as we've seen down heavily today. What I think everything means, what I'm looking at in the market, and kind of where I'm standing at here. First, let's get into the key numbers with Webull, because these are. Wait, let me turn on the lights for you, dark. Um, so these numbers are absolutely crucial. As we've seen, Webull's Q3 earnings. I don't think it just beat expectations. I think it's basically a huge move up against the entire fintech brokerage space. We got big competitors like Robinhood. I got up on the screen now. We got companies like Robinhood, SoFi. There's so many different so many different aspects of competition. So a quarter like this is basically saying that, oh, we're not the underdog anymore and we're coming for the top spot. So some of the main things that point out to me is that they posted 55% year over year growth in revenue to 156.9 million. That's not normal growth for a brokerage. That is, in my opinion, considered hyper growth. And that's the type you see in companies that are taking market share very fast. And the best part about this wasn't driven by some one type hype cycle. Trading revenue was also up 64% year over year, which goes to show that user engagement is accelerating very quickly. And when people are trading more on your platform, I would like to say that you are winning and you are having a good customer base that is forming. Not only this, but we saw, where was it? The assets, I think, customer assets has reached 21.2 billion, which is up 84% year over year. When I think this is something that has gone kind of under the radar. People haven't been talking about it too much, but it really matters because when a platform can control more users' assets, three things go up. And that's the deposits, obviously. We get engagement and we get revenue stability. This is the same flywheel that scaled Robinhood from a startup into a multi-billion-dollar public company. And Webull is literally following the same blueprint, but with international expansion layered on top. As we've seen, they've done a way better job of expanding internationally and growing in these other different types of markets, which it's definitely harder to grow in, but it's something that they have focused on and they have done a pretty good job, in my opinion, in their efforts, which is something that I think is showing by the numbers. And obviously, the stock price hasn't risen too much in after hours, but it's a very bad market, I would say, um, and it's something that you can't really control, and you just got to keep playing the long term game here. Because if we're looking at it from a top line perspective, user growth is quietly becoming a moat for the company. And as we've seen, where was it? I saw something. 25, I think it was. There you go. Serves more than 25 million registered users. Here we go. Registered users increased 17% year over year to 25.9 million registered users. And they have 4.93 million funded accounts, which is up 9% year over year. That's almost 5 million people with real money sitting inside the platform. This is very sticky revenue, and these are the users who aren't leaving Webull unless something really bad happens in the stock, and I don't think it's happening. And right now, they're doing the exact opposite. They're adding crypto back into the platform. They're bringing in corporate bond trading. They're expanding options in multiple countries and pushing into Europe, which is what I was just talking about earlier. Robinhood is not as internationally diversified as a company like Webull, and Webull has really done a great job of spreading internationally. And I think they will take this as their strongest suit because every other company has focused domestically mainly, whereas Webull has this advantage. And once they have a global financial ecosystem, they can grow much quicker, and it turns from a domestic product into a financial ecosystem, which everyone just kind of uses in general. So I think that's something crucial to watch as we see more accounts coming in the next coming months. Not only this, but we saw they introduced the Vega, which is their AI based investing assistant, which is huge in my opinion because every major brokerage is trying to integrate AI in some case, but Webull is actually shipping usable tools. And as we've seen in the past, retail traders love to see assistive features, which is things like watch lists, alerts, insights, and this becomes a retention engine. AI is exactly, in my opinion, how Webull is able to set themselves apart from other brokerages and become its own platform. So I think this AI pivot has been a good move by the company in general. And not only this, they posted strong numbers, which is one of the main things that is exciting to see. Their net income, where was it? Net income came in at 21, I'm pretty sure. 21. Let me just double check. Yep. Increased 55 million year over year from a loss to an income of 21.7 million. This is an adjusted net income of 32.9 million, and this is exactly what I think as an investor you want to see. Revenue is exploding while expenses rise at a manageable rate. Webull's operating margin jumped nearly 30 percentage points, and that's the type of expansion you see before a company gets re-rated by the entire market. And we see this type of growth, and this is one of the main bullish points that most people miss. Webull isn't just a U.S. brokerage anymore. They're expanding into many markets like Europe, with the as we've seen with the Netherlands first, and with the rest of the countries to follow. We've seen Australia, Canada, Singapore, Hong Kong, all these different companies, and most fintechs pay millions to expand globally, but Webull is pulling in users within organic demand and just I've seen advertising, of course, and they have some promotions running, but every company has that. But this international demand is one of the hidden upsides I think that the market has been sleeping on, and we still see it sleeping on as we've seen the earnings today. It hasn't shown up a big spike, but to summarize everything, I think that Webull, this earnings report was very strong, and it is very much so evolving as a company and as a platform. It's turning into a real global infrastructure and ecosystem. And the Q3 earnings really proves that they can scale profitability, which is very important as a company. The user assets are exploding, as I said here, 21.2 billion. And not only this, we see the revenue is surging up, trading volume is ripping up higher every month over month, and global expansion is all happening at the same time. And this is kind of where I see an inflection point where the stock may start to increase tenfold. As we've seen in the past, the stock hasn't done great since its IPO. I remember it IPO'd and then it had a very big run up. Let me check the all-time chart here. So if we're looking at this chart, where are we? Year to date. So IPO'd, of course, it went to 60. Every stock has that little meme jump, and then it's cooled off. It's almost down 85% since the all-time high, and it's sitting at a market cap of just 4 billion for a company that is managing 21 billion in assets, and it is growing year over year on both lines of revenue, earnings per share, everything. It is just a growing company, and I think this has gotten beaten down very hard in the last couple weeks. The whole market's been pretty choppy. It's been a pretty bad market for every company. So I wouldn't be too worried if I was investing in it. If I was, I might be looking to start a position here, honestly, just because this earnings report was very solid in my opinion. And I think it shows a lot of hope for the company, and it's pretty much at an all-time low right now. And I don't see any reason why you would stay away from buying this, especially hopefully we see the earnings. Oh, there's the earnings call. Let me get in this real quick on the side here. The earnings call should be starting in 15 minutes. There you go. Now we get to listen to the earnings call music. I'll turn it down for you guys. It's kind of... I mean, it might be like Mozart, actually. I don't know what it is. I don't have a good taste in that stuff. So we'll wait for that. If you guys think I should mute it, let me know. But I'm waiting for the call. And while I'm waiting, I'm just looking at the stock price, the year over year. The volume has been very high. I was looking at it just recently, and the volume has been high on this drop, which seems to show that there's a lot of resistance, and it's forming a base here around the $8 mark, which is why I think any type of buy right now is a good thing. If you're buying, I'll just turn this off. It's kind of annoying. Any type of buy here is, I think, a good idea, and I am personally looking to start a position here as well. I mean, we've seen the stock. It's obviously had its meme point. It had that one day where it was just absolutely massive. But the company as a whole is actually growing very quickly. We see this through the revenue from each user. We see this in many different aspects of the company. And it's something that I'm going to keep an eye on in the next coming weeks. I think their global expansion is something that is unmatched on the market. And it's no one's really talking about it either on the everywhere I look on, either it's StockTwits, Reddit, YouTube. No one talks about how big their international market is, and it's one of the few brokerages which has really expanded this well. And their stronghold is really like Europe, this Canada, Australia. I think once they can get the upside inside these users, this is going to create a lot of organic demand, and it's just going to continue to create upside for the stock that we will see in the next coming years, which is one of the main things. As well as, I mean, profitability is no longer a question. We see the net income, which came in at 21.7 million. And this is flipping up from a loss last year as well. So this is exactly what you want to see as an investor. Revenue is exploding while expenses are rising, obviously, but at a manageable rate, which the company has done a good job of managing. And Webull's operating margin has jumped nearly 30 percentage points over the last year, if I'm pretty sure here. Um, Operating profit 36.7 million for the quarter, year over year improvement, and 28.7 expansion. Yep, all very strong numbers, and these are the types of expansions you see before a company moves very much so higher in the market, and that's the one thing I'm going to continue to watch for. Not only this, but I don't know if they even mentioned it in the. Oh, they did. Subsequent, subsequent to the close of the third quarter, we introduced Vega AI, the next evolution of our AI-powered decision partner, developing real-time personalized insight and analysis using news, earnings, and data for investors to help navigate the complexities of modern trading. I think that this is very huge for the stock, and I think a lot of people haven't been giving it enough credit that it deserves. Every major brokerage is trying to integrate AI in some type of way, and I don't blame them. I mean, AI is the buzzword, and it causes stocks to go up. And if it's actually truly implemented correctly, I think it could cause the stock to do a big jump up. But the thing is that Webull's AI is actually shipping usable tools, which is one of the main things I've noticed because I have a Webull account. I don't have too much money in it personally. I got to get more into it. I didn't like the interface just because like I didn't like the news segment it had on it. But I see that a lot of the retail people that I've talked to, they love the assistive features like watch lists, alerts, insights, and this all becomes a retention engine if you think about it. So it's definitely got a lot more potential since it's given places like Asia exposure to U.S. stocks. I agree completely. Yeah, I think the one of the main bullish points for the stock that has been going under the radar is that it's not a U.S. brokerage. It's not what it was when it was starting out, and I think that's when it's going to create this huge expansion in the stock price. And I don't like giving stock price like estimates, but I could see this being 30 in the next 2 to 3 years, 1 to 2, 3 years, something like that. I don't want to give exact prices because not financial advice, of course. I'm just talking about stocks. But they're expanding very quickly, as we've seen. Their Europe market is huge. Australia, Singapore, Hong Kong, South Korea. I mean, all these markets are very untapped potential, and I know there's a lot of people have been using Moomoo, especially in the Asian countries, as you said. But Moomoo doesn't account, and they've been trying to get more into the U.S. now. I don't know if you guys watch other YouTubers. A lot of them get sponsors by like companies like Moomoo because they're trying to expand into the domestically U.S. regions because they're predominantly in Asia. And I think there's a lot of profit there. And as we've seen, I mean, I think Moomoo's trading it on the market, or its subsidiary is. Let me check. I'm pretty sure it's this one. Here we go. And so if we look at this, this is the Moomoo chart, and over the last year, up 72%. And I think it hasn't had too much more expansion than a company like Webull. And where do we see Webull stock over a year? Down 30%. And I mean, from all-time highs, I was just looking at it, it's down a lot more. And that's why I think there's a lot of potential here. And with a market cap of just 4 billion for a company that is managing over 21 billion dollars in user assets, this is something that I think will not stay too low for too long. Is the way I always like to say it. And it's something that I'm going to continue to have on my watch list. And it's something that I think it's not a bad entry, especially at $8 a share. I mean, it's pretty much at all-time lows. If we're looking at the chart, it's near the all-time low, and it's something that I'll continue to watch. I just want to quickly mention ASTS. It's my main stock. We've seen it drop heavily today, the last few days. And I think the main thing is we're just waiting for satellites. We're waiting for confirmation on the other details. Obviously, it's nice that we have the $3 billion in cash, but these losses the last few days have been bad. I just wanted to mention that just because like I'm one of the main people that promotes that stock or talks about it very positively. So we're waiting for the call. It should be starting here any minute. If anyone has any questions or talking points, I'd love to go through them. I just read through the call, the the earnings report. I'm going to be taking notes during the call, and I'm gonna have like a segment after the call, so I can give you guys my thoughts on the call, any questions and stuff like that. But I think they're moving very quickly, and I think it's something very exciting to watch. Um, if anyone has anything though, I'd love to talk with you guys. That's the best part. But as we've seen though, everything and every metric is growing, and it's growing faster, I think, than the market itself. Because most brokerages grow in line with the broader market, which is usually like 5 to 10%, and Webull is growing 55%, 84%, 70%, all inside of like these different aspects of like revenue, contracts. Have you seen DVLT? Pretty invested in that right now. I have not. Let me pull it up here real quick. Really quick. I have heard of it, but I have not invested into it. It has had a good few days. I mean, it's still a penny stock. I mean, let's see. Aims for 200 million in 2026. Interesting. Interesting. It doesn't look that bad, the chart. Let me check. All right, well that doesn't look I was like, "Oh, it doesn't look good. It doesn't look that bad." And then I zoomed and no, I'm kidding. It doesn't look too bad. I'll have to do research on it. I might make a video on it. I'll put this on my notes here. I don't know enough about it to give you a good opinion, but hopefully in a couple days I will give you a better opinion on it. Um, yeah, that was a good call out though. That's a cool looking stock. AI stocks, Data Vault, interesting. All right, I'll put that there. Um, but yeah, as we've seen, Webull is kind of just not moving much after hours. Even though I think this is a very strong earnings report, we've seen the international expansion. We've seen every number is growing. They're really outpacing the market itself, and they're stealing a lot of market share from competitors like Robinhood and E-Trade and stuff. And this is exactly what you see before an explosion. It's similar to what happened to Robinhood before we had. Let me check. So if we look at this, Robinhood before we had. Ooh, look at down 10%. I think that's what's holding back Webull today as well. This big drop in Robinhood is just brutal. But we've seen, if we look at the full chart, right before it had big expansion, there was this period of very much so stagnation, and then since like the last 2 years, stocks up almost 800 900%. I think that's going to be a similar case scenario here with Webull, and it's something I'm going to keep my eye on. It's something I think everyone should have their eye on at least a little bit, and I think it is a good stock to keep on your watch list. And I'm excited to hear the earnings, but it's moving towards data monetization and tokenization. It's hard for me to understand how, but I think that's the way the world is moving towards. Hey man, I'm all up for that. I don't like stocks that do the crypto stuff because usually it gets rug pulled, just like crypto. Like the company invests in Bitcoin, and then half the worth of the market cap is based on Bitcoin, and then they dilute the shareholder to get more Bitcoin, and then the market cap is still built on, I don't know. I've just seen a lot of companies that go down weird routes with that, but it could be good for all I know. I'll look into it though. I appreciate the heads up on it. I appreciate the heads up. But yeah, as I was saying, Webull's expanding constantly, and it's very much so an unserved demand in countries like Europe, Australia, and this once they opened multiple in 1 year, I think this multiplies their user base potentially by 3 to 5 times over the next decade, and it's a similar playbook where like companies like eToro or Revolut are using, and it's to scale their business into multi-billion-dollar valuations, and it's definitely working. And the biggest weaknesses of fintech brokerages in the modern day, I think, is over reliance on transactions. But Webull is fixing that because they're adding in corporate bonds, crypto trading, global equities, the AI driven features, Um, this is all I'm trying to say is more products usually equals higher average revenue per user. It leads to higher retention and more monetization layers. It's not a crypto company, but I think it holds crypto assets. Okay, okay. Um, yeah, I'd have to look into it. I'm all up for AI. I think AI is the fourth revolution. We've had industrial, we've had stone. I think AI is the next one, and I think it's gonna be a big part of the next decade. So I'll definitely look into that company. I'm surprised I've never heard. Like I've seen the ticker many times, but I've just never done a deep dive into it for like an hour or two. But as I was saying, Webull, the most fast growing fintechs burn cash like crazy, but Webull, as we've seen, isn't. Despite revenue surging 55%, adjusted earnings, adjusted expenses rose only about like 12%, which is this shows that they're disciplined in operations and they're scaling fast and efficiently, which Wall Street loves both combinations. Obviously, scaling fast and efficiently. You can't just have one or the other. You got to have both. And they've built a massive trading engine behind the scenes. People look at Webull as a retail trading app, but the volume numbers show something deeper. With 204 billion equity in notational volume and 147 million options contracts in the quarter, this is with other platforms like Fidelity, Schwab, Robinhood as competitors. This means their infrastructure is scaling and can support global expansion, which is one of the main priorities for a company like this. Most apps break when they hit high traffic. We've seen it with every website. I mean, it's one of the main things, security and all this stuff. But Webull's backend is showing real robustness and a sign that they're invested heavily into the tech. And as we've seen, their rollout of level 2 data, the advanced options, and AI alerts, I think will be all signal that Webull is targeting active traders, which are the highest value customers in fintech, because you make money on each transaction, and these people tend to trade more, deposit more into the stock market, and stay for longer periods of time, which is how Webull is able to build a long-term, high-value user base. So as we've seen, all this is, I think, adding up to a good quarter. The stock hasn't performed too well after hours, but it's still early. We have to see the call to give our full opinion. I think this is a great company, though. I think the earnings have been very strong, and it's something I'm going to keep on my watch list, because this isn't just a strong quarter. It's a real shift in the entire trajectory of the company. They're becoming a real global brokerage with a multi-asset platform that is driven by AI, when it's finally profitable, and it's a big competitor to Robinhood with better growth metrics and better margins. So that's kind of where I'm at this standpoint. I'm ready for this call. I just turned 5 o'clock, so it should be here any second now. I'll grab a drink real quick. You guys should grab a drink too. Grab some popcorn. I don't know what you guys do when you guys watch earnings calls. It should turn on any second now, though. For now, we gotta just listen to Mozart, though. I don't mind it though. Oh.
Good evening, and welcome to Webull's third quarter 2025 conference call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star, then 2. Please note, this event is being recorded. I would now like to turn the conference over to Carlos Questel, Webull's Head of Investor Relations. Please go ahead.
Good morning, good afternoon, and good evening, everyone. Welcome to Webull's third quarter 2025 conference call. Earlier today, we issued a press release detailing our third quarter financial results. A copy of the release can be found on our IR website at webullcorp.com under the Investor Relations tab. Please note that this call is being recorded and will be available for replay via our IR website. During the call, we'll be making forward-looking statements about the company's performance and business outlook. These statements are based on how we see things today and contain elements of uncertainty. For additional information concerning the factors that can cause actual results to differ materially, please refer to the cautionary statement and risk factors contained in our filings with the Securities and Exchange Commission and press release. both of which can be accessed via our website. Today's presentation will include a discussion on adjusted operating expenses, adjusted operating profit, and adjusted net income, all non-GAAP financial measures. Reconciliation of these non-GAAP financial measures to their most directly comparative GAAP measures are included in the press release that we issued today. It's important to note that although we believe that these non-GAAP measures provide useful information about our operating results, they should not be considered in isolation or construed as an alternative to their directly comparative GAAP measures. Furthermore, other companies may calculate similarly titled measures differently, limiting their usefulness as comparative measures to our data. We encourage investors and others to review our financial information in its entirety and not rely on a single financial measure. With me today is our Group President and U.S. CEO, Anthony Denier, and our Group CFO, H.C. Wang. We will begin with prepared remarks and then take questions at the end. With that, I would like to turn it over to Anthony.
Thank you, Carlos, and hello, everyone. Thanks for joining us today. Webull's third quarter results demonstrate continued momentum and growth in what remains a highly favorable market environment for our business. Our Q3 results reflect this environment, but also our global team's continued ability to achieve our goals, which drove strong results across almost every metric. Strong corporate earnings, interest rate reductions, and rallies in technology and AI stocks have driven robust market conditions, with the S&P maintaining near record levels throughout the quarter. This backdrop, combined with our ongoing technological innovation, product expansion, and increased access across geographies, continues to create significant opportunities for our customers worldwide. Webull is exceptionally well positioned to continue to capitalize on the global consumer shift towards mobile-first trading. We're executing well against this favorable backdrop. This quarter marks significant milestones in product diversification and geographic expansion as we continue to see high growth across our platform on the heels of our public listing. We successfully reintroduced crypto back to the Webull app and expanded our offerings in the space to include crypto futures trading. We also introduced sports prediction markets through our partnership with Kalshi and are on track to achieve a major international milestone as Webull Canada will soon become the first non-US brokerage in our group to reach $1 billion in assets under management. And just last week, we launched Vega, the latest evolution of our AI-powered decision-making partner, which will enhance the investor experience by providing personalized insights and analysis to inform trading decisions for our users. These offerings are already leading to meaningful ROI. We're seeing strong adoption among both new and existing customers as the platform successfully re-engages dormant accounts through compelling new products. During the quarter, we brought crypto trading back to the Webull platform and brought Webull Pay back into our group, which added $1.2 billion in AUM and over 140,000 funded accounts. Now over 50% of new funded accounts are trading crypto. We will continue to meet investors where they are and increase our share of wallet by introducing them to our expanded products and solutions over time. Our differentiated offerings, including direct deposit enablement and the launch of corporate bonds, continue to set Webull apart from competitors. With each new product, we continue to strive to be the one-stop platform for traders looking to get the most personalized and agile investment opportunities on the market. I'm proud of the Webull team for the innovation and execution they've demonstrated in reaching these milestones. We've reached another important milestone in our journey as a public company with the expiration of all shareholder lockup restrictions on October 8th, which significantly increased our public float, further enhancing our market liquidity. With that, let me now walk you through the key highlights from the quarter in more detail. Here on slide 2, I'll walk you through our third quarter highlights. We delivered another strong quarter for Webull shareholders, with the year-over-year revenue growth significantly outpacing increasing operating expenses, driving solid margin expansion for another quarter. We recorded top-line revenue of $156.9 million, representing 55% growth year over year, driven by four key factors. First, customer assets reached an all-time high of $21.2 billion, inclusive of the $1.2 billion in assets from the acquisition of Webull Pay, marking the third consecutive quarter of AUM growth. Second, equity trading volume surged for the third straight quarter, up 71% year over year. Third, our on-time delivery of new product offerings, including crypto futures and prediction markets, enhanced stickiness and new user growth. And fourth, we continue to broaden access to our leading platform across new and varied geographies. We recorded adjusted expenses for the quarter of $120 million, representing a year-over-year increase of just 13%. Our increase in expenses was mainly driven by increased brokerage and transaction expenses, reflecting higher trading volume, as well as higher general and administrative expenses, driven by increased compensation and bonus accruals reflecting headcount growth and stronger than expected performance. The increase in G&A expenses was partially offset by a lower marketing spend. Lastly, we delivered a fourth straight quarter of operating profitability with a strong 28.7-point increase in adjusted operating margin on a year-over-year basis to 23.4%, representing adjusted operating profit of $36.7 million for the third quarter. We continue to focus on execution and margin expansion, reflecting our commitment to delivering sustainable growth and value for our shareholders. Turning now to slide 3 and our 2025 roadmap. We continue to enhance our existing product offering while executing against the ambitious roadmap we outlined in Q2 to support our growing customer base and expand market share through new offerings and geographies. We're particularly excited about the launch of Vega. Vega is an AI tool that combines news, earnings, and technical data to deliver a focused, intuitive experience that helps both new and seasoned investors navigate modern trading and make smarter decisions. Other key features of Vega include statistical insights for options trading that showcase investment opportunities and voice commands for placing trades as we continue to enable accessibility on our platform. As we continue to broaden our offerings to solidify our position as a one-stop investment platform for retail and sophisticated investors, Vega will play a crucial role in enabling further consolidation as investors gain powerful insights across their portfolio of equities, bonds, crypto, and more. Webull Premium, our subscription-based service for active traders and long-term investors, has now reached 90,000 subscribers, a 20% increase from just last quarter, and is tracking well ahead of our internal target of 100,000 subscribers by year-end. Our premium offerings have been further bolstered by the introduction of corporate bonds during Q3. Corporate bonds provide customers with low-risk investment opportunities and steady yields while also facilitating asset transfers from traditional brokerages, positioning Webull as the one-stop platform for sophisticated investors. I'm excited to discuss the launch of prediction markets on our platform. Through our partnership with Kalshi, we've introduced sports prediction markets covering NFL, NBA, NASCAR, F1, and college football events. This offering provides an engaging and accessible trading experience that lowers barriers to entry. The results have been exceptional. More than 30 million prediction contracts were placed in October, nearly twice as many as were placed in September, over half of which were sports contracts. As I stated previously, the return of crypto to our platform has delivered instant results and has become a significant driver of funded account growth. While we currently offer crypto trading to our customers in the U.S., Brazil, and Australia, we will continue expanding crypto offerings across geographies and are actively exploring digital asset licenses in numerous other markets. Finally, our expansion of products available internationally continues to progress. During the quarter, we launched our Webull platform in the EU, beginning in the Netherlands, and anticipate launching in additional European markets over the coming months. We also entered into a strategic partnership with Meritz Financial Group to offer U.S. market access to Meritz customers in South Korea. In addition, Level 3 options trading is now live in Singapore and Hong Kong and is set to launch in Japan imminently. And we're excited to continue to scale and reach even more global customers as our product offerings continue to grow. We have now over 700,000 funded accounts outside the U.S., and we continue to prioritize delivering U.S. products to international markets and building diversified revenue streams globally. On slide 4, I'll discuss our growth in both users and funded accounts. During the third quarter, we added roughly 1 million registered users, bringing the platform to a total of 25.9 million registered users, a more than 3 million increase from the third quarter of last year, representing a 17% increase. Importantly, that 1 million increase also represents a large sequential increase, showcasing that our product and geographic expansion is driving robust user growth. Webull was originally launched as a global market data platform before evolving to become the leading digital investment platform we are today. As a result, we have a significant number of registered users in geographies where our trading platform is not yet available. We are committed to offering access to best-in-class market data and information to everyone, whether or not they currently have a brokerage account with us. On the right side of the slide, you can see funded account metrics. Funded accounts, defined as accounts where customers have made an initial deposit that has remained above zero for 45 consecutive calendar days as of the record date, showed healthy growth. We added approximately 200,000 new funded accounts this quarter, inclusive of accounts onboarded through our acquisition of Webull Pay, bringing the total number of funded accounts to 4.93 million, a 9% year-over-year increase. As we continue to innovate and enhance our offering, we're also happy to report that our quarterly retention rate remained high and grew slightly on a sequential basis to 97.7%. Turning to slide 5, as I previously mentioned, Webull customer assets reached an all-time high of $21.2 billion, inclusive of $1.2 billion in assets from the acquisition of Webull Pay, representing an 84% increase on a year-over-year basis and a $5.3 billion sequential increase. The growth in customer assets reflects strong momentum driven by favorable market dynamics and robust deposit activity. Our customers deposited over $2.1 billion during the quarter, a 31% increase year-over-year, bringing our cumulative net deposits over the last 12 months to $5.9 billion. On slide 6, I'll provide an overview of trading volumes for the quarter. While we're always looking to expand and enhance our product offerings, growth in our core products also continued to accelerate. Our equity volume increased by 71% on a year-over-year basis and 26.7% sequentially, totaling $204 billion. Our options contract volume was $147 million in the third quarter. The associated revenue continues to outpace contract volume growth after implementing a new pricing model in the second half of last year, and we are pleased to see the continued results of that initiative with a steady increase in the monetization of our options business. We are now midway through Q4 and are on pace for further growth. October was our best month ever in terms of customer deposits, trading volumes, and revenues, and our new products are driving increases in market share and the consolidation of users' portfolio onto the Webull app. With that, I'll pass the call over to HC for a closer look at our financial results for the quarter.
Thank you, Anthony, and thanks to everyone for joining us today. Slide 7 shows that in the third quarter, Webull generated revenue of $156.9 million, up 55% year-over-year. Adjusted operating expenses for the quarter came in at $120.2 million, an increase of 13% from a year ago. We continue to take a disciplined approach to balancing execution costs and operating efficiency as we continue to scale the business, and we are pleased with our continued margin expansion and profitability. On the following slides, I will walk through the components of revenues and expenses in more detail. Now turning to slide 8 on our profitability performance. As Anthony mentioned earlier, Webull has now recorded its 4th consecutive quarter of operating profitability. In Q3, adjusted operating profit reached $36.7 million, our most profitable quarter ever, representing a 28.7% improvement in adjusted operating profit margin year-over-year. Adjusted net income for the quarter was $32.9 million, up $38.6 million year-over-year. Adjusted net profit margin improved 26.5% year-over-year, reaching 20.9% of revenue. Turning to slide 9, our trading-related revenues continue to accelerate, supported by higher trading volumes across all asset classes and improved monetization, particularly in options. Momentum from the second quarter carried through to Q3. Daily average revenue trades increased 56% year-over-year, driving a 64% rise in trading-related revenues. On a per-trade basis, revenue increased to $1.53. Turning to slide 10 on interest-related income. This category includes interest earned on client and corporate cash, as well as revenues from margin financing and stock lending activities. In the third quarter, interest-related income grew 32% year-over-year to $43.4 million, driven by higher interest earning balances across all categories: corporate cash, client cash, margin lending, and fully paid stock lending, reflecting the continued growth of our client assets. Finally, let's turn to slide 11 for a closer look at operating expenses. As a high-growth business with meaningful operating leverage, we expect operating expenses to increase as we scale, but at a much slower pace compared to revenue growth. In the third quarter, operating expenses grew 13% year-over-year, primarily due to higher brokerage and transaction costs associated with rapid growth in trading volumes and product expansion. General and administrative expenses also increased, reflecting headcount growth and higher bonus accruals tied to stronger than expected performance. These increases were partially offset by lower marketing spend as we continue to optimize our marketing and branding strategy. We remain committed to maintaining expense discipline while continuing to invest strategically in innovation, customer acquisition, and wallet share expansion to capture sustainable long-term growth opportunities. Now, thank you, everyone. With that, I will turn the call back to Anthony before we open the line for questions.
Thanks, HC. This was a record quarter for Webull on many metrics, including revenue and funded account growth, marking an exciting new chapter for our platform as we successfully unveiled innovative product offerings, including crypto futures, sports predictive markets, and our AI-powered decision partner, Vega. We remain energized as we continue to deliver our product roadmap for U.S. and global investors. I want to recognize the global Webull team for their continued dedication as we continue to grow our platform following our public listing in early 2025. We look forward to engaging with you at several upcoming industry and investor conferences. On that note, we welcome any questions you may have, either here on the call or one-on-one.
Thank you. We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star, then 2. At this time, we will pause momentarily to assemble our roster. And your first question today will come from Kareem Saif with Bank of America Securities. Please go ahead.
Hi, good evening, everyone. Can you hear me okay?
Loud and clear.
Perfect. Okay, well, congrats on a great quarter. My first question is on prediction markets. It was very nice to see you guys added sports contracts to the offering. So, Anthony, I was wondering if you could maybe help size the revenue opportunity for Webull from the prediction markets offering, as well as maybe share any of the economics that you have with Kalshi.
Sure, happy to, Kareem. Yes, so many people don't know this, but we've been partnering with Kalshi since the very beginning of the year. We just recently got into the sports prediction markets at the beginning of the NFL season, late August, I believe, for Thursday Night Football. And the prediction market pre-sports has seen some really nice growth as we did like SPY hourlies, NDX hourlies, some major Fed events. But the sports numbers have been completely blowing us away, right? And we've all seen the headlines and how much growth we've seen from Kalshi and Polymarket on a notional value. We're seeing that lockstep, and the value of offering these sports predictive contracts are multifold the way I look at it, right? And we announced 30 million contracts in October. We're already now halfway into Q4 on the 20th of November, and that number is completely gone. We're blowing that number away already in November, right? And I wouldn't be surprised if we see a month-on-month growth at over 100% on a pretty consistent level. Now, the opportunity from a monetary standpoint is different with every partner that Kalshi has. So we do charge a 1 cent commission to our clients that are trading per contract, and we also get an exchange rebate from Kalshi. And the blended rate comes in anywhere between 1.25 to 1.5 cents per contract on the revenue side. That being said, I don't think it's merely a revenue catalyst for our business. These sports prediction markets are re-engaging dormant accounts, right? And it's also addressing a completely new TAM of customer. And so, if we have customers that might have came on the platform in 2021 during GameStop, the world opened up, they got quiet, right? Life got in the way, and they weren't actively trading. Now they're back because of these sports prediction markets in a big way. And it's a great way to re-engage customers that have gone dormant. It's a great way to address a whole new addressable market of clients. So very exciting time for our industry. And I do think prediction markets are going to be something that's going to continue to push us not only on new customer acquisition, but product expansion.
Got it. That was very helpful. Thank you very much. And then for my follow-up, so obviously it was very nice to see, and I believe you called it in your prepared remarks, net deposits in October were very strong. It was the best, I believe, the best months for Webull. But when I look at net deposits in 3Q, very strong also, 2.1 billion, which I believe, when I look at it as a percentage of your AUA or AUC, it's almost 53% annualized. So I was wondering if you could maybe help unpack that a little bit for us. Where are you seeing that strength coming from? If you could maybe unpack it by geography, that would be very helpful.
Absolutely. So one of the great advantages we have versus a lot of our peers is the fact that we are truly a global platform. We have 14 broker dealers that are currently operating around the world. The US is the largest and the oldest, but we just opened up the Netherlands in September, went live in 2025, and we continue to look to expand. That expansion and us taking significant market share, not only in the US, but outside the US, is one of the great drivers for that AUM growth, right? So we took in 2.1 billion of net deposits in Q3 alone. That's not including the acquisition of Webull Pay and the money we received as part of the AUM in that acquisition. And I would put it on two different catalysts for that impressive net new money coming in. One is the evolution of our marketing style. So we have been evolving our marketing over time, and we've seen a lot of success and great ROI on our incentive transfer programs. So offering like sticky money to roll over 401ks into Webull, where we're offering matching deposits, extremely successful in bringing new AUM into the platform. And then back to the geographic expansion. We're seeing huge growth in markets like Canada that we didn't announce is about to cross 1 billion in AUM alone in that market. That's only, call it 20 months old at this point. We have other locations that we're seeing huge amounts of growth, like Australia. Of all places, Thailand is growing it's doubling on a quarter-over-quarter basis in terms of what we're seeing in transaction. And that's a recurring theme that we're seeing outside of the U.S. As we start expanding on U.S. products outside to the non-U.S. entities, we're seeing the customer demand for U.S. products really push new customer acquisition and new AUM coming into the platform.
Got it. That was very helpful. Thank you so much for taking my questions. I'll hop back in the queue.
The next question will come from Steven Chubak with Wolfe Research. Please go ahead.
Hi, good afternoon, and thanks for taking my questions.
Hey, Steve.
Hey, hope you guys are well. So wanted to ask a multi-parter just on expenses and margins. So we saw really good expense discipline in the quarter. Total revenues were up 55%, adjusted expense up 13%. So an impressive incremental margin just north of 75%. I wanted to understand the sustainability of those incremental margins, just given myriad opportunities to lean in on the investment side. And then for the second part, given the comments you just made, Anthony, around the marketing strategy, why not choose to lean in a little bit more in terms of marketing spend, just given the strong momentum in 3Q in October? I recognize the high ROIs. That was the one bucket that actually saw declines year on year. So I wanted to better understand how you're thinking about the opportunity to lean in there as well.
Sure. No, happy to pick that up. So when we look at our customers being able to transfer assets in, we're constantly improving on the product and the rails for them to do so easily. And when we think of margin expansion, we are very cognizant that we are in an extreme growth phase of our business. So right where we are now in the mid kind of 20s of margin, I think is extremely healthy for a growth company. And we're going to continue to deliver on that. I can hand it over to HC for a little more detail on the actual margin and the expenses side.
Sure. Thanks, Anthony, and thank you for the question. Yeah, so for us, as you can see that we've consistently maintained our adjusted operating margin around 20% for the last 4 quarters. And so we are constantly optimizing and adjusting, how we're approaching expenses. For example, marketing. I think you asked about, why not over-invest in marketing when the market is good? I think in a certain sense, we are very opportunistic. We actually do a lot of work and review on a market-by-market basis to see where we get the highest ROIs in terms of our marketing dollars. But we also want to be smart about, investing in the forms of different promotions that we take. And so we have, over time, shifted more from giving away free stocks to customers to more of these like asset matching promotions. And as a result of that, we are seeing significant increases in net deposits in AUM growth. Another result of that is there's a greater amortization of marketing expenses. So it's not just given away immediately when the customer fund their accounts. The customer would have to deposit AUM and maintain their AUM for a number of months before they accrue and earn the whole marketing spend. So actually that helps us in managing expenses, to make the marketing expense more predictable quarter over quarter, which I think is a good thing in terms of managing the P&L. And also for the for the G&A expense, I think a lot of it is just proportionate to our headcount growth and to our continued investment in R&D as we continue to enter into new geographies and expand products. So we'll continue to remain disciplined and manage our expenses to make sure that we continue on the right path of margin expansion and continue to capitalize on this market environment and continue to drive growth.
That's great color. And for my follow-up, I did want to ask, given the relaunch of crypto in the U.S., how your crypto strategy might evolve now that you're getting that second at bat, and specifically wanted to better understand where the crypto pricing is today. Do you see an opportunity to potentially be more aggressive in terms of take rates to attract more users, and how you see that pricing evolving over time as competition intensifies in the space?
Yeah, no, I appreciate that question. Extremely excited about the relaunch of crypto, and I appreciate you mentioning it's kind of our second at bat. We had crypto and we launched crypto back in 2019. Through the process of trying to get our company listed, previous administration, we spun it out to Webull Pay. We brought that crypto back to the brokerage platform, the main brokerage platform, back in August, kind of like a light speed project, if you will. And so I look at it exactly like that. This is our second opportunity to really knock it out of the park. What does that mean for us, right? So we're still in the early innings of crypto, at least crypto offering on our platform. I think we lean into the sophisticated fact of our active trading user base. And so right now we have approximately 100 basis points. Coinbase retail is about 150 basis points. I know some of our competitors use a variable model based on the actual token itself for pricing. And we are going to aggressively lean in to squeezing those take rates to attract active crypto traders. Now, timeline on that business is probably going to be early in 26. I have to be careful on guidance, but when I think about it, we have an amazing opportunity to relaunch our crypto product with a whole new vigor that attracts the customers that call Webull home. Sophisticated, experienced, and active retail traders. We are going to cater our crypto trading product specifically to them. As we roll out especially new products in the crypto world, I don't want to give up too much on this call. We'll be announcing a lot of major new additions to our crypto offering to get us on the same level playing field as all of our competitors. Once we are on that playing field, we're going to aggressively take those active traders from our comps.
That's great color. Thanks so much for taking my questions.
The next question will come from Mike Grondahl with Northland Securities. Please go ahead.
Hey, thanks, guys. Anthony, can you talk a little bit about the merits announcement and kind of the opportunity you have there globally? And is merits the first? Do you have other customers internationally you're helping like that?
So Merits is the first publicly announced, but not the first. And when we say Merits, we're talking about institutional customer bases or B2B business, which is a completely new line of business for us. We have been 100% focused on retail since we launched in 2018. Now we're spending a significant amount of internal resources and a significant amount of focus on targeting B2B partnerships in geographies where we don't currently operate a broker-dealer. We're even talking to B2B partnerships to institutional type partners in places where we actually do have a retail platform. Having said that, none of this revenue is yet even factored in to our current models and our current growth. And so the future, so Merits is an example of getting access to South Korean retail without having to have a South Korean retail brokerage license. We're going to continue to focus on opportunities like that. And in my opinion, the institutional side of our business, which is just beginning, Merits is the first announcement on a very long list of clients that are in the pipeline. That's going to be a huge boom for not only for our market share, but for our top and bottom lines.
And when would you expect Merits to go live? Has it started? What does that timeline look like to ramp up?
So typically, institutional onboarding takes much longer than retail onboarding, right? We can open up a retail account in minutes, and our retail customers can typically trade within 5 minutes of downloading the app. It's very different for institutional. There is a lot more checks. There's a lot more approvals, sometimes even up at the board level. That being said, we are currently live with Merits. We are currently trading on behalf of their clients' orders. And as we continue to grow the relationships, that the amount of flow that we receive from Merits will continue to grow over time.
Got it. And then just lastly related to that, where will that revenue show up? Is that other revenues or in the equity and options line?
So this is actually one of the fun parts. So the revenues actually show up in our transaction volumes. So even if we see a slowdown in U.S. retail trading volumes, our trading volumes will continue to tick up because we're onboarding a lot of these B2B relationships. So it's going to be baked into the transaction revenue mixed in the equities and hopefully in the next several months options. Currently, we're trading equities only with Merits.
Got it. Hey, thank you and good luck.
Thank you.
Next question will come from Chris Brendler with Rosenblatt. Please go ahead.
Hey, thanks. Good evening, and congratulations on the strong results here. I'd like to ask about the funded accounts, which ticked up. I know even if you back out the crypto, you did see a nice tick up there. I know there's been a little bit of a refocus of your marketing strategy towards assets over accounts, but given the gap between registered and funding, I'd love to see that close a little bit. So how are you thinking about funded account growth as you head into 2026? Thanks.
Sure. Hey, Chris. Well, funded account growth, in my opinion, we're going to see. So we're going to start seeing a lot more attribution coming from outside of the U.S. Like we mentioned on the call earlier, we have more than 700,000 funded accounts now that are outside the U.S. And we've seen the momentum and onboarding of funded accounts outside of the U.S. Basically, for the last 6 months, it was about 55%, 50%, right? 55% of new funded accounts coming from the U.S. Broker, about 45% coming from outside. That number is now completely equalizing, and we're at about 50-50. And in fact, I wouldn't be surprised if we start seeing new funded account growth outpace outside of the U.S., outpace funded account growth in the U.S. I believe that's going to be the continued driver as the 13 broker dealers that we operate outside the U.S. start to really mature. If you remember, the first brokerage outside of the U.S. we opened was Hong Kong in Q3 of 21. The second one wasn't until Q2 of 2022, which is Singapore. We just opened our latest one in the Netherlands in September of 25. So these are all relatively young businesses that are in hyperscale mode. And so we're going to see a lot of low cost, low customer acquisition costs, new funded accounts really being driven from outside the U.S. And in the U.S., we're going to continue to focus on quality of our customers.
That's super helpful, caller. Thanks so much for that. I wanted to add a quick follow-up on numbers. Does crypto or prediction markets have any impact on third quarter metrics like DARTs or trading revenues? And will those kind of transactions show up in those metrics in the fourth quarter?
HC, you want to take this?
Yeah, sure. So we actually closed the Webull Pay transaction at the very end of the third quarter. So what the third quarter metrics includes is the AUM and funded accounts that were consolidated as part of the transaction. What's not included is the revenues, the transaction volumes, and the DARTs, because those take place over the course of the quarter. But the transaction did not close until the very end. But they will start to be included and presented as part of the consolidated group results starting in Q4.
Okay, great. That's helpful. And then I just have one more quick one, which is on Vega. It seems like this is a product that would help attract folks to your platform and potentially stay there longer. Any insights on the initial impact of Vega? And on the expense side, is there an ongoing expense for running this AI that you're outsourcing, or is it all developed in-house so there won't be much additional expense?
Yeah, so the Vega AI launch is not only a huge thing for Webull. This is the future of investing, right? There is so much news flow, so much information at all investors' fingertips. Often it's like drinking out of a fire hose. Now, we've created in-house, to answer that question, in-house, we've created our Vega AI trading assistant. Not only analyzes your portfolio, but can advise you on high levels of risk and give you insights into implied volatility in some of your options positions. Right? This is a game changer for the industry. And so because we developed it all in-house, there is no increased cost, and the user engagement has been phenomenal. We're seeing tens of millions of engagements of Vega, whether it's for actionable trading through the Vega AI trade assistant or just analysis of earnings or consolidation of news. And every day we're seeing more and more engagements, and we're seeing regular engagements, meaning we're seeing users come back to Vega regularly. And I believe that this is now the beginning of a whole new way that retail engages in their own portfolio and accesses market information and market opportunity.
Wow, that's great. Well, I obviously need to try it out. Thanks so much.
The next question will come from Brian Vietin with Cybert. Please go ahead.
Great. Thanks, guys. Anthony, so nice pickup in funded accounts this quarter. I think you said 50% of new accounts are trading crypto. Does that include the Webull Pay folks? And then looking ahead, could you speak to the opportunity in converting existing Webull funded accounts? I'm just curious on that, as I know your customer demographic is younger and digitally native. Thanks.
Yeah, exactly right. So the average Webull customer is in their young 30s. So very, very crypto native. And it really pained me back in September of 23 when we had to strip out our crypto offering from our brokerage platform. Our customers were not happy with it. So bringing it back was imperative. Now that we have it back and we have the opportunity not only to knock it out of the park with a better offering of crypto, especially for our customer type, we've been seeing great engagement for crypto native customers either coming back to Webull or discovering Webull for the first time. So like you mentioned, 50% of new funded accounts, 50% of them, the first trade they made was with cryptocurrency on the Webull platform. Those are not customers coming over from Webull Pay. Those are new customers to Webull in and of itself, simply because we now offer crypto. So we're going to continue to lean in to that type of customer. And like I mentioned before, make sure we give the tightest spreads and the best trading experience for the customer that calls us home. And that's the active, sophisticated type.
Very good. Thank you. And then just one more, if I may, just on the future listings. I think at one point the plan was to get to 100 by year end. I'm not sure if maybe there's some, it's a little contingent on some of the regulatory dynamics, which you alluded to, but just the complexion of those future listings. Are you envisioning more so, listing established crypto protocols or, kind of newer tokenized assets where you might be more differentiated? Just any commentary on the listing strategy would be great. Thank you.
Yeah, so one of the fundamentals that we've always held here, whether it's crypto, it's equities, it's options, again, prediction markets, we want to give our customers the availability to trade as much as we possibly can offer. If that means, so you mentioned 100 as a number. I don't want to go on record and say we're going to have 100 different tokens available to trade by year end, but that certainly is our goal. Having said that, when we look at the opportunity for crypto, it's more than just offering new product types. It's offering a better experience to do so. So yes, the short answer is yes. We plan to have as many different opportunities and as many different offerings on the platform as we possibly can bring, and we plan to really lean into making sure our customers feel that this is the best place. Webull is the best place to trade.
Thanks, Anthony. Congrats on a great quarter.
Next question will come from Edward Engel with Compass Point. Please go ahead.
Hi, everyone. Thanks for taking my question. Appreciate some of the color you gave about funded accounts outside the U.S. Just kind of wanted to get a better sense on maybe some of the localized features that you're offering in some of these markets and kind of where the roadmap is, whether it's tax wrappers or savings accounts or local banking connectivity. Thanks.
Sure. So it really depends on the region. We've always had a single mentality here. We have one global vision, but we make sure that we execute locally. What does that mean? It's simply every Webull broker dealer that we have, 14 around the world, has a local team. It's not an American that's sitting in London. We have a Brit sitting in London, running the office there. There's a reason for that. Not only do they have a better feel for what that customer needs, they also have a better opportunity for local marketing, how to differentiate. That being said, a lot of those businesses are still relatively young, and we're constantly adding new products. Things like tax wrappers, for example, IRAs in the U.S. or ISAs in the U.K. The UK, maybe too much. But as soon as we have the regulatory approval to add those products, we always do. And for the most part, there are 2 or 3 exceptions, but for the most part, every Webull entity will trade the local security in that country, as well as give customers the ability to trade U.S. products. The one example I can think of is Indonesia. There is no license yet in Indonesia for our Indonesian customers to trade U.S. securities. However, hopefully that'll change by year end. That all being said, we see the majority of transactions happening in our non-U.S. entities. The transactions are happening in U.S. products. And that goes back to things I've been talking about for the last year and change. The exportation of the U.S. retail trading experience is one of the largest growth factors that I believe we're going to see in the next year and a half, right? Especially when it comes to retail out of the U.S. We have seen the adoption of not only obviously ETF trading outside the U.S., but options trading specifically. For example, customer sitting in New York City has a position in NVIDIA yesterday, coming out with earnings at the close. And we have a customer sitting in Japan, also with a position in NVIDIA. They're looking at the same news flows. They're listening to the same podcasts. They're watching the same Reddit feeds. They're reading the same comments on the Webull community. Yet a lot of times they're not able to trade the same products. We're changing that. Now our customers in Japan can trade calendar spreads, can put on a condor, right? That doesn't exist for the most part outside of the U.S. And we are working very hard to make sure that we export that U.S. retail investor experience to everywhere outside the U.S., which is one of the main reasons why we're seeing such amazing growth in our non-US brokerages.
Great. Appreciate that color. And then, I mean, I guess quarter to date, we have seen a bit of volatility in the U.S. equity markets. Curious if you're able to provide any color on, I guess, how your users are kind of holding up through some of that. Thanks.
Sure. I think uniquely Webull, we are extremely well positioned for a rising VIX. Our customers, I mean, we've been offering the ability to short sell since the first day that we launched the platform in 2018. Right? Our customers, again, I keep saying this word sophisticated. I keep saying this word experienced. When there's volatility, our customers are trading more. And so just the past couple of weeks, we've seen explosive volume due to volatility. And I think Webull is probably uniquely positioned to weather volatile markets a lot better than our peers. That, of course, being said, long-term volatility is never amazing for a cyclical business, but I believe as a platform, we are accelerating into this volatility in the short term.
Great. Thanks for that. And then, yeah, congrats on all the recent progress.
Thanks.
We'll conclude our question and answer session as well as conference call. Thank you all for attending today's presentation. You may now disconnect.
All right, there we go. We have the call there. I'm not listening to that music again. Thank you, but no thank you. All right, I'll go over some of the keynotes from the call that stood out to me. The company is entering a breakout phase, in my opinion, and with the revenue up 55% year over year, driven by a massive jump in trading activity and a record of customer assets up 84% from last year. This is something that I think is boiling down to this growth is being fueled by real engagement from a rapidly expanding global user base. And at the same time, Webull has proved it can scale efficiently, and expenses rose only 13 to 18%, which is far slower than their revenue, which allowed the company to flip from a loss last year to a net income this year. And I think it's going to continue to show that they're gaining leverage as more users are trading and depositing using these new features. This is exactly what profitability looks like, and it's something you want to look for when you're investing and looking for a maturing fintech platform. I think this is not a bad option. And what sets this quarter apart from other quarters I've looked at from this company is its strategic foundation that it's laying for the future. And by this, I mean that the company is expanding very heavily into new international markets, relaunching crypto trading in the U.S., rolled out corporate bonds, and introduced its new AI model, Vega. These aren't small add-ons, but they're the beginning of it transforming from a U.S. brokerage to a global ecosystem. As he was saying on the call even, I think this is a huge and a strong quarter. It was a statement that Webull is stepping onto the next stage of its growth story, and it's something I will continue to watch. It is currently trading at 8:08 after hours, and I think I'm going to pick up some shares around here. I think this is a great entry, personally, not financial advice, of course, but it's something I'm going to continue to watch here. The market's been getting beaten up. As I was looking at earlier, Goldman projects 40 billion stock selling scenario over the next week, and this audio came out 6 hours ago. So that is not very good. Declined in value past the threshold of 6,725 on Wednesday. It closed the day at 6,642. Should stock prices extend falls, the bank estimates that symmetric trend hedge funds could sell as much as around 65 billion. This is absolutely terrifying. This is almost as bad as it was back in March and April of this year. If you guys remember that time when there was all the tariffs and stuff going on. I did not have a channel to talk to people about, but having people to talk to, it makes it even worse almost now. I will definitely get a position tomorrow that this globalization will lead to massive growth. I think the exact same, my friend. I'm right there with you. I think it's a crucial thing that I'm going to continue to watch over these next couple months. I think the earnings year over year is some of the strongest we've seen on the market, and it's just such a bad market to be reporting earnings. I mean, even here it says the last time prices fell through one of these closely watched levels was in October, and prior to that on April 2nd when announced tariffs. I think it's a bad market to be investing in. And before Before these hedge funds were long around 150 billion worth of global equities. And I mean, these guys are really running the market. These guys are criminals. No, I'm not. I'm kidding, but I'm not kidding. You know, these guys are robbing us in broad daylight, pretty much, of our funds. But yeah, I think this is a strong quarter, a good call. I like the presentation as well. I was looking at it during the call if you guys were watching that, but I thought it was a nice presentation they made. Um, but yeah, if anyone has any questions, I'd love to answer them. If not, I might get off in here in a couple seconds. I appreciate you guys all for hanging out though, especially Joe. Some people like Whoa. Um, it makes the streaming easier when you're able to chat with other people. I am very bullish though on this stock. I think I will continue to keep an eye on this. It will be on my watch list for sure. And I might be looking to enter a position here. What's it at? 8:07 after hours. Um, yeah, it's in a good spot. It's in a good spot. And well, not the stock price, but I mean the company. The company's in a good spot. But yeah, I appreciate you guys. Make sure you guys drop a like. It helps out a lot. Make sure you guys drop a sub. It also helps out a lot. And I'll be doing more calls in the future, more videos in the future, a lot more in the future. That's kind of the main thing for me. I hope you guys had a great rest of your day. I know the market hasn't been great, but hopefully that doesn't get you down too much. I'm probably gonna go for a little walk or something like that. Get my mind off it. But take care, guys. Have a great rest of your day.